Let's bring on Ted Karkus. He is the CEO and chairman of ProPhase Labs. There he is. Ted, good afternoon.
Greetings. Am I live now with investors?
You are live.
Okay. Can you see my screen?
Not yet. Go ahead and click that share screen button on the bottom. Okay. We've got ProPhase slides up right there. So Ted, all you've got to do, I'm going to give you the floor, but just tell us when to switch the slides.
Greetings all. Thank you for joining me today. I am assuming that everybody will read the forward-looking statements. I only have 20 minutes for the presentation, so I don't want to spend a lot of time on it, but I can tell you that I like to share as much information as possible so that our investors are as in tune to know as much as what's going on as possible. By the same token, some of that is going to be forward-looking statements in nature, which are appropriate and real and honest at the time that I make them. It does not mean that things don't change over time. So let me just go back a step. We did our forward-looking statement. I have a background as an investor. I think like an investor. All I think about is terminal value on a per share basis, meaning how many shares are outstanding, divided into the value of our company. So if I raise capital, if I buy back stock, decisions like that are made based on what's best for our shareholders. I'm the largest shareholder of record in the company. I'm a long-term shareholder. Most of our other shareholders, the vast majority, are also long-term shareholders that have been with me 5, 10, 15, 20 years. I have a history of executing on behalf of shareholders. I think that's probably more important than anything when investing in a small cap development stage company like ours. I have a history of turning around other companies. I turned around ID Biomedical, which was potentially going out of business. 7 years later, it was sold to GlaxoSmithKline for $1.4 billion. I launched a proxy contest to win control of our company 12 years ago after the prior management had some highly unethical and questionable activities. Our company was potentially going out of business or going bankrupt. I turned around our Cold-Ease brand and sold her for $50 million. And since that time, I've searched new ways to build our company. We've now diversified. If you're looking at the corporate overview page, we diversified into ProPhase diagnostics late last year in response to COVID testing. I told everyone ahead of time that we were going to go out and buy a CLIA accredited laboratory. We did so literally within weeks. We then ramped up. And by the end of December, we started testing the third week of December. Those last 2 weeks of December, we ramped up quickly. By January, we were probably doing more business than 95% of the labs in the country. That's execution. So we developed this great business. We built out a fantastic lab in Garden City, New York with 25,000 square feet. We have all state-of-the-art equipment. People ask, how do we compete with the other large labs in the country? Interestingly, the real question is, how can they compete with us? We have all the state-of-the-art equipment without all of their bureaucracy. Furthermore, they have historic non-COVID testing businesses that they support first. Interestingly, 2 of the largest labs in the country just came out. Their turnaround times are anywhere from 3 to 7 days. Our turnaround times are within 24 hours. So frankly, virtually any customer, potential customer that we pitch to or we talk to, they embrace us. Many of our customers were working with 3 or 4 or 5 other labs. After they begin working with us, they tend to drop the other labs that they're doing business with. So as far as I'm concerned, we don't really have competition. In fact, there's so much COVID testing business out there right now. We have no problem ramping up our business. Just going back historically a little bit further, as I said, we turned around our company many years ago. Following that, our stock bottomed at about 65 cents a share. Since that time, I've paid out $1.80 in stock dividends. Our stock at the time, as I said, was around 65 cents. Now trades around $5. So I and the rest of our management team have built value over time. And I strongly believe that we're going to continue to build more value over time for our long-term shareholders. In terms of COVID, just going back, as I mentioned, in January, we ramped up in a very significant way, raised a lot of capital in January. Come February, the incidence of COVID dropped dramatically, the amount of testing dropped dramatically, and that occurred all through the summer. So we had a weak second quarter. You can expect that we'll have an equally weak third quarter. However, you have to put it in perspective that in those quarters, most of the losses are really non-cash items. If you go back to the second quarter, if you take out the non-cash items, we actually earn money. So we're continuing to build value. A lot of the non-cash items are actually from stock options. Interestingly, a lot of the people that got those stock options are no longer with the company. So we had expenses for stock options where those people are no longer with the company, or I was able to cancel stock options. So it's an interesting dynamic when it comes to stock options. But the bottom line is our company is growing, our revenues are growing, we're earning, our cash grows. And so we've had a very strong year this year, even taking into context that our second quarter, we reported a small loss, but without the cash items, we're actually profitable. You can expect the same type of numbers in the third quarter as the second quarter. Again, June, there was virtually no COVID testing. July, there was virtually no COVID testing. We had a blip in the beginning of August, and then things started to gradually rise in August. September is starting to really, really ramp up nicely. And our fourth quarter I anticipate that the fourth quarter is going to be a very strong quarter. So first we have to get out of the way and report the third quarter. I'm sure it's one of the reasons that our stock price is down where it is right now. Once we get through the third quarter, I expect a very strong fourth quarter for COVID testing. We have all of our traditional customers with us from back in January and February. They're all back in full force now. But in addition to that, unlike last December when we first got into the business and we were new to the business, we have now built an entire customer base and foundation and infrastructure that didn't exist 6 and 9 months ago. And so we are extremely well prepared for going into this fall and winter. The incidence of COVID has gone up dramatically. The positivity rates, at least in our lab, are higher now than at any time in the past year, higher than they even were in January. Those are the positivity rates as a percentage of the amount of specimens coming into our lab. So there's an enormous amount of testing. So all of our old customers are back. Schools are testing more than ever now. We historically did a lot of school testing. In addition to that, we are building up independent pharmacies. What's nice about the business with independent pharmacies is any one customer, like a school or a large customer, for instance, last year we were testing across an entire state. When that customer's business went away, the whole business went away. With independent pharmacies, if 1 or 2 or 5 independent pharmacies close down, that's a rounding error. It has no effect on us. But we have more than 100 independent pharmacies opened up now. We expect or anticipate that number to grow dramatically to 200 to 300. As that happens, these independent pharmacies, they're generating 10 or 15 specimens a day per pharmacy. Some pharmacies are attached to schools where the schools are going to the independent pharmacy for testing. So some of the independent pharmacies, the number of tests that they could do could be 50 or 100 or 200. When you keep building the independent pharmacies, even if there's a shift in who wants to get tested and who doesn't, there are always people that need to be tested either for going to an event, or if they want to get on an airplane, they'll run to their independent pharmacy. So in addition to all the schools that we're building up, we're also building up the number of independent pharmacies, and then there are a number of other avenues that we're looking at as well. So ProPhase Diagnostics, that division of our company, is all about the CLIA COVID testing. We do PCR testing. It's state-of-the-art PCR testing. We also do antigen testing and antibody testing. I'm really proud of what we've developed there. And the fourth quarter of this year is going to be a tremendous year. I should also, by way of perspective, we announced a $6 million stock buyback. Our stock came down from $16 in January. Clearly, as the incidence of COVID dropped and our testing dropped, our stock price dropped. Presumably, we're viewed primarily as a COVID testing company, but now we have a situation, as I mentioned, where our fourth quarter is going to ramp up in a huge way. Obviously, we think our stock is undervalued, and so we announced a $6 million stock buyback. I haven't made any other comments about that. There is a waiting period between when we're approved for and set up the stock buyback program to when we're actually allowed to start buying back stock. I don't think I need to go into more details, but our intention is real to buy back stock. We did not make that announcement just for hype or for fluff. So that's our basic CLIA business. I would like to go into talking about our diversification strategy. We want to be more than just a COVID testing company. And to be clear, historically, from our our Cold-EEZE cold remedy brand when we owned it and sold it. We kept our manufacturing facility. We also developed another dietary supplement business. The dietary supplement business is growing. We now have full distribution in over 40,000 food, drug, and mass stores for our dietary supplement business. So that's great. And now we are diversifying further. We want to leverage our lab business. We also would like to leverage our food, drug, and mass retail distribution business. And really almost by coincidence, we hired Nebula Genomics, which does both. I'm really excited about that acquisition. And as it says on the screen, Nebula Genomics provides a leading position in personalized genetic testing by providing access to affordable and secure whole genome sequencing. Whole genome sequencing is a genetic testing technology that obtains, and now you just switched screens on me while I was reading it. And now we're back. That obtains comprehensive data on every gene and all of your chromosomes in your DNA. WGS can be used to examine your ancestry, health, diet, rare gene mutations, and rare diseases. That's sort of big picture on Nebula Genomics. To be clear, we acquired the business. We announced it was like a $14.5 million acquisition, but net of cash, it was really $10.8 million. A net of the cash that was in Nebula came with the deal. And of that $10.8 million, a couple million of that was actually in stock at $7.46 per share. We have the founder of Nebula, George Church. He's one of the world leaders in genomics. He elected to take our stock instead of cash. And he also chose to start an advisory board for our company. He's the first member of it. We're going to be attracting other world leaders in genomics to our advisory board. I'm hoping and expecting that George is going to provide us with other startup genomics companies that have exciting potential so that we can build further. And again, so just to put that in perspective, the cash out of pocket for the Nebula deal was something just over $8 million of cash. Meanwhile, this is a business where Nebula internally estimated approximately $9 million in revenues over the next 12 months. That's based on $300 whole genome sequencing cost to them. As I mentioned on previous calls, we expect to get whole genome sequencing down substantially. Historically, it cost billions of dollars for the first whole genome sequencing. That came down to thousands of dollars. And that's why companies like Ancestry.com and 23andMe never looked into whole genome sequencing. It was simply too expensive. But now we believe we're going to get the whole genome sequencing cost down from $300 to $200 or less. Right now, Nebula sells just directly online to consumers. We find tremendous price elasticity of demand. So if we can offer this product for $200 instead of $300, that alone should drive that $9 million estimate up dramatically. But then in addition to that, and we're already well on our way to getting it to $200, another part of that is that this is actually a subscription-based model so that we sell the whole genome sequencing at cost. But then there's a subscription model that's included in that where you get a recurring monthly report based on your genetic makeup, your report. You get a personalized report so that you can look into more information relative to your genetic makeup, which is really interesting information that Nebula provides. It's a high profit, the subscription base, because it's online and it's somewhat automated. That is a very high profit margin business. So our idea is to simply drive the sales of whole genome sequencing at cost and then drive the subscription model, which will provide tremendous profitability. So our goal right now is to get the whole genome sequencing down. Another goal of ours is to provide something called low pass, which studies and provides a little less information than whole genome sequencing. Low pass still provides significantly more information than a lot of the well-known competitors that we could talk about. Low pass is something that we potentially could sell for $30 or $50 in our food, drug, and mass retail stores. And again, that's something we could sell at cost. We could then upsell the whole genome sequencing once we have the consumer that's taken an interest in our products. We could help upsell the whole genome sequencing. We can also upsell the subscription model. So there are a lot of ways that we could leverage our current CLIA business and our current food, drug, and mass business. So the goal is take Nebula's base business that they built over the last 3 years. The founders of Nebula work for us now, other than obviously George Church, who's on our advisory board. But the management team actually works with us. The CEO actually works in our offices here. So we're looking to build the direct-to-consumer business in a major way. And then the next goal ultimately will be to do additional research so that we can work with physicians and work with diseases and work with developing drug therapies. And that's all sort of the future. I don't want to get too much into that now, but that's the future. The first step, though, is building our whole genome sequencing business, potentially doing the whole genome sequencing in our CLIA lab. And then in addition to that, selling a genomic testing product in food, drug, and mass stores while driving the online business. So there's enormous potential to Nebula. Could you go to the next slide, please?
We have a question from the chat, Ted, that I actually
Sure.
would love to ask. I'll bring it up on the screen here. So how are you looking to grow and leverage the diagnostic laboratory? Are you in network with private payers? It's a new lab and they're usually quite difficult to get in network.
Yeah, that's a great question. All right. So first of all, the diagnostic laboratory, obviously we're talking about COVID testing right now. Our business is literally exploding while I am talking to you on this call. I just got off a call, for instance, we won major RFPs with Township of Oyster Bay. It was competed on by every lab, all the major labs in the country. We beat them all out. We then won Dutchess County. Both are 300,000 residents, dozens of schools between them. I just got off a call literally just before this call with Dutchess County, where I don't know, there were a dozen or 2 dozen schools on the call to talk about. We're already testing. We have testing sites at Dutchess County, but now all the schools want to do testing with us. In addition to that, as I mentioned, we have independent pharmacies that are growing every day. We're over, we started with 10 or 20 independent pharmacies, maybe a couple of months ago when I mentioned that on another call. We're well over 100 independent pharmacies now. We have a goal of growing to 200, 300, 400, 500 independent pharmacies in the coming months. That's just 2 examples. We're dealing with another customer. We're potentially going into prisons. And it's interesting. He said they're a captive audience. Well, actually, they really are. It's a tremendous business, and it's a door that potentially we're about to open. So I am not concerned at all in the growth of our CLIA lab testing business for COVID. I would also like to diversify into the more traditional types of testing with pathology, blood and urine, and so forth. We would do that probably through a lab acquisition. And that's for the future. I'll talk more about that when we actually do it. But in terms of COVID testing itself, we have such a bright outlook. Once we get through the 3rd quarter, our 4th quarter, and for the next 6 months of testing, because you also have to understand we're now entering the cough, cold, flu season. So everybody that gets sick with a cough, a cold, or flu is going to be concerned that they have COVID. So we're going to have an enormous amount of testing, in my opinion, over the next 6 months. And I can just tell you the numbers we're doing right now are some of the largest numbers as of today, starting now, that are as big as back in January, and we're only growing. So I anticipate a very strong 4th quarter. Unfortunately, June and July there was just no testing around. So I don't expect a strong Q3, expect that to look more like Q2. But then Q4 is going to boom. When you look at the full 12 months, we will have had a fantastic year. I am incredible. I am so proud of our whole management team for what we've accomplished this year. And once you look at our entirety of the 4 quarters of this year, our numbers are going to be through the roof. Also, somebody made a comment recently that it's not fair to compare year-over-year numbers. I think it's absolutely fair because all of our growth has been organic growth. The acquisition of the lab we did late last year had no customers. We built that business from scratch. So all the business we did, when you look at the numbers, at the investment highlights, the strong revenue growth, 24.4 million compared to 5.5 million. I'm really proud of that number. When you look at the full year numbers, we're going to blow away last year's numbers and only going to grow from there, as now we're going to be incorporating Nebula. And so as we diversify, we're going to be leveraging our historical assets and businesses with Nebula, and then we're going to be growing Nebula going forward. I hope that answers that question.
That was a really in-depth answer. Thank you for that. We are unfortunately up against the clock.
Okay.
Ted Karkus is the CEO and chairman of ProPhase Labs. It's up on the screen, ticker PRPH. Ted, thank you so much for coming on the Small Cap Healthcare Conference today. And sorry we couldn't get this.
That's all right.
Screen share
not a problem. I got on a roll, and I hope everybody. And if anybody wants more information, investors, feel free to reach out to me. I am open to all investor calls if they're serious. I don't care about short-term traders. long-term investors. I love helping people. And as I said, I'm the largest shareholder. If I can help you make money, then we all win.
All right,
Thank you so much.
ProPhaseLabs.com.
All right.
Thank you so much, Ted.